Question. The global key professional accounting body is options A. The International Accounting Standards Board. Option B. The Institute of Chartered Accountants of India. Option C. The Financial Accounting Standard Board. Option D. The International Accounting Standards Committee. Answer. Option A. The International Accounting Standards Board. International Public Sector Accounting Standards were issued by option A. International Accounting Standards Board, option B. International Auditing Practice Committee, option C. International Federation of Accountants, option D. None of the above. Answer. Option C. International Federation of Accountants. The process of recording financial data up to trial balance is options A. Bookkeeping, option B. Classifying, option C. Summarizing, option D. Analyzing. Answer. Option A. Bookkeeping. In which of the following cases accounting estimates are needed? Options. Employees Benefit Scheme, option B. Impairment of losses, option C. Inventory of obsolescence, option D. All of the above. Answer. Option D. All of the above. The long-term assets that have no physical existence but possess a value is known as option A. Current assets, option B. Fixed assets, option C. Intangible assets, option D. Investments. Answer. Option C. Intangible assets. Which of these best explains fixed asset? Option A are bought to be used in the business. Option B are expensive items bought for the business. Option C are items which will not wear out quickly. Option D are of long life and are not purchased specifically for resale. Answer. Option A are bought to be used in the business. The assets that can be easily converted into cash within a short period, that is 1 year or less, is known as option A. Current assets, option B. Fixed assets, option C. Intangible assets, option D. Investments. Answer. Option A. Current assets. Shares received from the new company recorded at options A. Face value, option B. Average price, option C. Market value, option D. None of the above. Answer. Option C. Market value. If the two companies have different accounting policies in respect of the same item, then they make necessary changes to adopt dash accounting policies. Option A. Same, option B. Different, option C. Importance, option D. Some. Answer. Option A. Same accounting policies. When two or more companies carrying on similar business decide to combine, a new company is formed. It is known as options A. Merger, option B. Amalgamation, option C. Absorption, option D. Demerger. Answer. Option B. Amalgamation. When one of the existing companies take over business of another company or companies, it is known as options A. Merger, option B. Amalgamation, option C. Absorption, option D. Demerger. Answer. Option C. Absorption. In case of dash, one existing company takes over the business of another company and no new company is formed. Options A. Merger, option B. Amalgamation, option C. Absorption, option D. Demerger. Answer. Option C. Absorption. While calculating purchase consideration, dash values of assets is to be considered. Option A. Total, option B. Half, option C. Net, option D. 25%. Answer. Option C. Net. Net asset minus capital reserve is dash. Options A. Purchase consideration, option B. Goodwill, Option C, liabilities. Option D, total assets. Answer option A, purchase consideration.